This is a trade recap for June the 5th, 2012 on the ES and Eurorunner trading systems. All profits are taken between 1 a.m. and 4 p.m. Eastern Standard Time to cover the European session and the US session. At 1:05 we had a long here. It was stopped out at break even. We close all positions on the ES if the first 5 periods of the stop loss line go flat and a contrary directional triangle appears, which is this red triangle right here. Therefore, this position of 2 contracts made 0 ticks. The open price was 78.75. The close price was when this triangle appears at the beginning of the bar. When the bar opens, that is, the triangle appears, you immediately close your position. This was a break even at 0 ticks. The first scalp here appears, which is valid to take. We made 6 ticks on scalps in the pre-market, 8 ticks in the normal regular trading hours. The open price was here. Some traders would get a tick better in price, some traders get a tick worse in price, many get the open price. You click as quickly as the scalp appears, therefore we always use the open price, give or take a tick. The open price here, 6 ticks higher, was right here for an exit. Next we have a trade short. It's a standard trade, not cautionary, because the previous trade did not make more than 5 points, as you see here. So the entry here, short, is at 75. The first price of 76.50 wasn't hit. So therefore the system generates a chase price that was entered here on this candle. 6 ticks of profit made on the first contract, second brought to break even as the runner. That gets stopped out, unfortunately, right here. When the first valid scalp comes up here, which it did, the entry is in the open price. 6 ticks of profit are made on this candle here. It went a few ticks against the open, but made 6 ticks of profit on this candle here. None of these other scalps, which are after the first number, which therefore qualify or therefore are categorized as intra-series scalps, none of them meet the rules for an intra-series scalp, so therefore no additional scalps were taken. Next we have a new scalp series that started here, with the first number being a 2. That's the next scalp to be taken, entered here on the open price, and exited here 6 ticks later. If traders miss the open price, they take it out at the 6 ticks of profit from the open price, because many times if you miss the open price by a tick lower, you get a tick better many times. Half the time you get a tick higher, half the time you get a tick lower. Many times you get the open price itself. So we use the open price for calculating profits, because when you lose a tick on some trades, you make it up on other trades. So 6 ticks of profit were made here. This is a cautionary trade because the previous trade made over 5 points. And because this trade from the bottom here, that is, to the top, was over 5 points a move, for cautionary trades, because they are more dangerous to take, we take a 2-point pullback from the highest price, and the limit order would be placed here 2 points lower. If the prices keep moving up, we keep moving our limit order up to be 2 points under the highest price. These are the rules for a cautionary trade that make the cautionary trade that much more effective and give it a very high success rate when we apply these rules. This is only applied when the move that generated the long from the bottom here up to the top is over 5 points and has not had a retracement of at least 2 points during the movement of 5 points or more. That's called a wiggle of 2 points. The entry here was taken, 2-point limit back here. The profit was 6 ticks. We're still in pre-market. That was taken out at this candle here. This 5 that comes up is still part of the first 5 periods of the stop loss line, therefore it's not valid. This week these scalps will be color coded to show that the first 5 periods, if a scalp comes up, they will be in yellow, which is not to be taken for a rookie trader. They are a more cautious scalp to take, not for rookie traders, not for smaller accounts. Here we have 2 scalps. They're at the end of a large movement upwards, and this movement at the time when the scalps were taken, this was about a 12 or 13 point move. As you see, it kept going up. But this scalp, actually I need to change to the 2-minute system. We're at 9:30 now when the market opens. We go to the 2-minute candles. And we go back here to those scalps. Those scalps were taken at what was at the time a 13-point move. Later series scalps after 10 points are going to be going forward a rule to not take these, because these fail more. They have a higher rate of failure than the earlier scalps do. And I think to keep things safer for traders, we're going to no longer take scalps after 10 points a move, because scalps that late tend to fail. This is something I'm observing closely, but I've seen this taking place quite often, enough that I want to limit those lower probability trades and keep it to the highest probability trades. So these two trades unfortunately took 8 ticks of loss and 8 ticks of loss. Going forward here, we had another cautionary trade because the previous trade made over 5 points. We take a 2-point pullback because the movement from here to here never had a 2-point retracement or wiggle. So we take a 2-point pullback, which was from here to here, the 2 points. We take it within the first 5 periods. We don't take it further out. We keep it within the first 5 periods of the entry, so that we are part of the initial burst. If there's a burst down, it's part of the first 5 bars. These are for cautionary trades, and not all traders take the cautionary trade, but for doing so, it's a simple rule of simply looking at the movement from the top, the most recent swing high, down to the low price here. If it's moved 5 points or more, which it did here, you take a 2-point pullback as your limit, and you do it for 6 bars, which is 5 periods on the stop loss line. So actually 6 bars is right there. So that's not a trade. Going forward here, we don't take trades between 12 and 1 during lunchtime in the US session with European and London banks closed. It's usually not a very good time to trade. Lower success rates. We want to keep our trades to the highest success rate. We don't take this long. The first valid trade to come up was a scalp at 1:24 in the afternoon. It was taken here, exited at the first cautionary triangle, which appears here, for 0 ticks. But the next scalp comes up here because the scalp is 20 periods flat on the stop loss line, or 20 periods flat with only 1 turn up on the stop loss line. This is 1 turn up, which is 1 tick up. So by the time this next tick occurred, it had been 20 periods plus the 21 periods, 5 periods here, plus the one that's 27 periods of the stop loss line being flat, except for 1 turn up. That is permissible per the sprint rules, because 1 turn up is essentially a flat. It's a very insignificant turn up, so therefore it's as if it was flat anyway. So this was a scalp to take. A lot of traders got 10 ticks of profit on the scalp. Those that came back for the trading after 1 o'clock were able to take this trade and make 10 ticks. And going forward here, we have the end of the day trade on a scalp right here. None of these other scalps met the rules of being a sprint. This one did almost, but the prices were within the yellow. Scalps have to be beyond the yellow to take them. All valid scalps are beyond the yellow. On a long, that means they're above the yellow. On a short, they're below the yellow. Here, this scalp was beyond, but we closed at the first cautionary triangle that came up, which was here. So it ended up being a net of 0. It was 6 ticks against it and about 4 ticks for it, but we closed it here. Total day was 24 ticks of profit, which is 6 points of profit. On the euro, we had a short here at 2:30 in the morning, the first qualified trade. This wasn't a long qualified. It has to be on a long beyond the yellow line, which it wasn't. On a short, this certainly was. 20 ticks of profit are made here. 1/2 of the position is taken off at 20 pips. The next trade is a valid scalp here that occurs on a 3. 15 pips of profit are made there. The next valid scalp here occurs on what's called an intra-series scalp. This has had a 20 pip pullback, which is one of the rules for intra-series scalp, or 3 periods in the stop loss line that are flat. It fits both rules. It only has to fit one or the other. The scalp is taken here on the 4. Open price makes 15 pips down here with several pips to spare. Going forward, this scalp here was not valid because it's inside of the yellow, not outside, not beyond. And the runner's taken out of the cross of the stop loss line here. 20 pips, 15 pips, 15 pips, and 63 pips on the second half of the standard entry was taken out here. The next trade is a cautionary trade because the previous trade made over 50 pips. 99 pips for it, 0 pips against it, made over 50. Therefore, it's 20 pips of profit taken. It's one position or a half a position. So if you normally use 2 lots, for example, on a standard entry, you use 1 lot for a scalp and you use 1 lot for cautionary trade. That was taken here. 20 pips of profit to be made on it was taken out at 20 pips right here. After 12 o'clock, euro trading is very, very insignificant and it's not worth trading on. And look, going forward, I'm going to be not taking profit or losses after 12 o'clock in the afternoon, but I still do. For right now, there was an entry here short, and the exit was at the end of the day at 4 o'clock, 3:55. That was 13 pips of loss. So with that 13 pips, the euro still netted 51.5 pips with all these positions. Without that loss, the euro netted an additional 13 pips for a total of 64 pips of profit. So up until 12 o'clock, which is the best time to trade, the euro made 64 pips of profit. Thank you very much. I look forward to seeing the room tomorrow. Have a great day.